Welcome back. I'm Pratap here. Today is the 17th December 2024. In this video, we are going to evaluate the performance of high liquidity zones generated by the NeoStock software in our previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You know, the cost of this training is over 8,000 US dollars. We are providing complete free training. All the training videos you can access from our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post having our free training course. And this post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page and you need to start your training from lesson 1.1, and all these videos are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join the channel. It will be helpful to you. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 7 high liquidity zones from daily and 75 minutes time frame. Out of these 7 high liquidity zones, a couple of stocks gave the trades. And first one is PFC. This is a rally base rally. This is a 75 minutes high liquidity zone identified by our software. It looks like this zone is violated, right? But see, before that, the morning 9:15, 75 minutes candle. Prices entered into our fine-tuned zone and sharply moved up and reached the 15 minutes target. And after that again sharply prices came and then price zone is violated. And how we fine-tuned this zone? Go to the 15 minutes time frame. So here you have a drop base rally and again rally base rally. You have two order flows. You should immediately ask the question, why I selected the bottom order flow, why I did not select this rally base rally. What is the reason? The answer I provided in your Friday's HLQ zone analysis video. I told that video is a very important video. Even in our training lessons playlist also, I added that video. I told all the secrets of how I am identifying the exact zones where we get the real trade opportunities. You can draw a zone, drop base, rally, again rally, base, rally. What will happen? Both will become LOTL zones. You need to take a trade here. If you take a trade here you need to exit. See the risk. The risk is very high. Risk management point of view, the origin we are selecting, origin from where the order flow is started. So please listen, the last Friday's HLQ zone analysis video. Today is the 7th, right? So the last Friday, that is on 6th, not 6th, sorry for my mistake, 14th December HLQ zone analysis video. Even I added that video into our important strategies and analysis playlist. You can directly access the playlist and you can find. So if you would have listened that video, today you would have exactly planned how I fine-tuned this zone today. Okay, drop base rally. This one again I fine-tuned with this rally base rally. Type 2 proximal entry. You can also draw type 1 proximal entry. See, type 1, it picked up the orders from this zone. So this is the origin. Rally base rally. This is the origin. Again rally base rally. Or you can consider even drop base rally. Either way you can treat. It doesn't make any much difference. Okay, type 2 proximal point of view. But generally what we do when you take type 2 proximal, you add some entry buffers also, right? You will add some entry buffer before that. Generally use entry buffer 0.1%. But anyway, without entry buffer also, generally we use entry buffers for the stocks, at least 0 point somewhere here, you would take the trade. But here today, it's a clean trade. Price just entered into the fine-tuned area and sharply moved up, and finally reached the target. And when 9:15, 5 minutes candle, and this is a 9:45, 5 minutes candle, it reached the target. That means within half an hour, your trade would have been completed. How much profit we would have got? PFC has given 12,480 rupees profit as per one futures margin cost, which is 6.8% ROI. Everything is excellent, right? But remember, this trade happened exactly at 9:15, 1 minute candle. I know many of you don't trade in 9 o'clock, 9:15 candle. Some of you will trade. When some of you trade, maybe some of your orders may execute or may not execute. Before you place the order, the prices reach. Sharply it would have moved up. Anything would have happened. Some of you taking cash trades, maybe you would have kept a pre-order in the market. Maybe your trade would have been executed. If it is gap down, you get heavy stop loss. That's why many of the people don't keep pre-market orders during the intraday. If it is your WIT trade or MIT trade, mostly you will keep trades before market starts. But intraday is it's a very sharp. The price movements are very sharp, and you aim for short-term trade opportunities. The gap up or gap downs may sometimes will influence heavily on your stop losses. So that's the reason why mostly we don't keep pre-market orders for the intraday point of view. At least 9:15 candle. If you kept your trade and if this is executed, then this entire profit you would have captured in just a half an hour. But strictly speaking, this is not the very practical trade. If your trade is executed, you are a lucky person. But why we are discussing? To check the power of our high liquidity zones. How well our high liquidity zones are working. That is what you have to understand. You know that today is a bearish day. From the beginning itself, market is opened with considerable losses. But our high liquidity zones worked. Second time, maybe if anybody would have taken a trade, maybe your trade would have been stopped out. You have to accept that. Taking second trade is a risky here because today is a bearish day, that is one thing. Moreover, this is a type 2 proximal trade, not type 1. Type 2, if it is type 1, maybe you would have taken. Or maybe if you are generally use stop buffers, sorry for my mistake, generally use entry buffers, 0.1% entry buffer use. If price entered into the entry buffer, from there it moved up, then definitely you would have taken second trade in this zone. Generally we don't avoid that. When prices are moved from entry buffer, second trade we take inside the zone. Mostly we don't use entry buffers unless there is a good RR is available. If first trade is, that means first trade not entered into the zone, not disturbed the order flow in the zone. But the first trade itself type 2 proximal entry. That's why mostly second trade, many times it will work second trade, but you have such a bearish day, it is quite risky. See, that's why after that, see, prices this is stopped out, or maybe within our stop buffer, it moved up. After that, not a big move. See, after that again, fully it is violated. And finally, prices were moving down. Still market is working because I am recording a little earlier. I don't think we get any trade opportunities now for the rest of the stocks. If any opportunities, anyway, while during our analysis discussion, we will find that. Okay, HLQ zones point of view, it's an excellent profit today, this in bearish day. So if any of your trade is executed from this zone, definitely you are a very, very lucky person today. Morning 9:15, who trade in morning 9:15 candle, I'm talking about them. But 80% people, they avoided 9:15 candle, mainly to, to go away from these volatility changes. Many people will avoid at 9:15 candle. But there are people who knows, who take a good risk. A lot of huge volatility movement is there. Some people may take in 9:15. Highly experienced people who don't have fear. Okay, anyway, HLQ zones performance, it is a successful trade. Remember, whatever we are discussing, they are for HLQ zone performance point of view. See, all this analysis is I'm doing by keeping our software performance in mind. It's not about my trades. Whatever I am discussing, they are not my trades. Whatever I am discussing, they are all HLQ zone performance. Okay, next one is a PFC. Here we got good trades, couple of trades we got. Oh, sorry, not PFC. What we discussed is PFC. Next one is Canara Bank. See, Canara Bank, if you would have listened to my HLQ zone analysis videos and the concepts I explained, important videos, today you would have got a good money from these stocks. Couple of months back, I explained these strategies. Whatever we are going to discuss today, I explained couple of months back. And I kept the video in important strategies and analysis video playlist also I kept in our channel. All those people who listened, definitely they would have got a profit today. 2 opportunities it has given. First opportunity, see, the price did not enter into the fine-tuned area from the stop entry buffer itself. Whatever the entry buffer you had, 0.1%, from there it just reached and then started moving up. And you failed to reach 15 minutes target, but 1:3 RR is achieved. It achieved 1:3 RR. There is another 1:3 trade. But how to take this 1:3 trade, what is the strategy? That video I already explained couple of months back. Exactly the same thing happened today in the second trade. Those who listened a couple of months back about my second strategy, whatever in the second trade, whatever the strategy I explained, if those who remember, please comment in the comment section. At least I know that you people are sincerely learning these concepts. Okay, this is a 75 minutes high liquidity demand zone. See, in a bearish day we are getting, see, finally the zone is violated, but before the zone violation, it gave 2 trades, successful trades. This is a 75 minute zone, rally, 2 base candles and a rally candle. This is a failed ERC, but still used in the leg out as per the dynamic view. Our software is having that intelligence. Many of you will ignore this zone. Why many of you will ignore? Because this candle is not having 75% body. That way we will ignore. But we learned our concepts in a different way at our NeoStock training program. You learned dynamic related zones, everyday HLQ analysis videos. I am explaining about these dynamic zones concepts. I mean dynamic view. Even Friday's video, I explained about this dynamic view concept. Even Friday, I gave a detailed explanation. That's why I suggested in our Telegram group, I posted a message. I suggested everyone listen that last Friday's video, the 14th December video. Okay. So this 75 minute zone is fine tuned with 15 minutes time frame. Here in the 15 minutes, observe carefully. You have a rally, base, rally. Have you seen this leg out is not really a convincing leg out? Do you agree? Okay, we have rally, we have a base, medium size. This is the 15-minute zone, not 5 minutes. This is a fine-tuned 15 minutes, and this leg out is not really convincing. I am sure most of you will agree. This is looking like a medium-sized candle. Why we have drawn is compromised this zone. This is a compromised zone. This concept I already explained. Why compromised? Because in the next candles, the order flows are reaching near to the zone and again moved up. This is one price action clue. And we have a clear 5-minute zone in this area. That's why 15-minute zone I compromised. First, even I didn't draw this 15-minute zone. To be honest, I didn't draw this 15-minute zone first. Mostly we reject this zone and we leave. This structure is not good. No proper leg out structures here. Mostly we reject this zone and we leave. But the moment I went to the 5 minutes, I want to go for an aggressive trade setup. Anything available, I want to evaluate. That's why I went to the 5 minutes. 5-minute structures here, they are not at all good. Here is a 5-minute structure, drop base, rally. But next candle you see this zone is completely gone. Here you see 5-minute structure, failed ERC candle as a rally. You have 2 base candles and then a rally candle. Then I went to the 15 minutes structure. How I identified this order flow, I am just trying to tell you. Then I convinced 15 minutes. Okay, rally, base, rally. Okay, even though it is not a great leg out, still it is okay. I am convinced. Then I convinced. Otherwise, I would have ignored this zone first time. So I went to 5 minutes after seeing this candle. Maybe there is another reason why I am convinced, even if it is aggressive trade setup also. See, there is a rally, failed ERC candle rally, 2 base candles and a rally. Prices again came near to this 5 minutes order flow. See, prices didn't touch this zone. That way I thought maybe there is a strong institutional order flow in this area. Generally what happens, in the next when prices are again moving, it may move, institutions may add new order flows in this area. That possibility is also there. First of all, this 5-minute zone is a fresh zone, not a tested. And risk is also very small in this area. So this is 0.1%, 0.1%. 0.1% means 0.0001 times. We are getting around 10 paisa entry buffer. I added that entry buffer. See, the first morning at 10:30 candle. This is a 10:30 candle. Exactly entered into this entry buffer area, and then you see how sharply it moved up. But it failed to reach the target. But it reached 1:3 RR. Why I have drawn up to here is just want to show you. It reached 1:3 RR. Maybe 5 paisa, maybe 1 paisa, 2 paisa shortage is there. But okay, it reached 1:3 RR. And many of you, what the people will do, some people who are happy with 1:3 RR, they exit their trade here. Somewhere here near reaching 1:3 RR, maybe few paisa before, maybe because this is a 100 rupee stock, maybe 1 paisa or 2 paisa before, you will exit the trade and you book the profit. Those who aim for 1:3 RR. Those who aim for a more target, what they do, once it reaches the 1:3 RR, they will be using 1 minute trailing stop loss. And then they will start trading from here. Trailing stop loss they will keep from here. After reaching 1:3 RR or near to the 1:3 RR, 1:3 RR, they will start using trailing stop loss. Even that way also, those who are aiming to reach 15 minutes target, probably what they do, now they will start implement after reaching this 1:3 RR here. See, prices reached 1:3 RR here. Now they will start using trailing stop loss. See here we have a drop, you have a base candle. This is a 1 minute demand zone. If this demand zone is violated, they will exit. They will book the profit. Of course, they keep some stop buffers. Drop, base, rally. See, prices came and it is pierced. Maybe it could be within your stop buffer. Again, prices were moving. There are higher chances again it will move up and it will reach the 15 minutes target. But in this candle, definitely your stop loss would have been hit. Somewhere here, you might have exited your trade. Still, you would have booked good profit. This is I am talking about for those who did not book the profit at 1:3 RR, but aiming for reaching the 15 minutes target zone, because most of our HLQ zones targets will reach to 15 minute zones, but sometimes they will fail. Maybe today is a very bearish day. Maybe that could be one of the reasons why supply is very strong and unable to push up to the 15 minutes target zone. There could be different reasons. But still you book the profit. See, this is our entry. This entry buffer is our entry. And here below this 1 minute zone violation, somewhere here you would have exited. So this entire thing is our profit. Because it hit the trailing stop loss has been hit. Definitely you have to exit. There is no other option. But anyway, this is a successful trade, but the problem is failed to reach 15 minutes target. That is the point we should remember. Probably I have to write achieved 1:3 RR, but failed to reach 15 min target zone. Okay, how much profit it has given? Good profit. Till 1:3 RR I am calculating. 6,750 rupees profit, which is the 3.9% ROA, close to 4%. Okay. Maybe those who used this, where is that 1 minute? Did I delete? Okay. This drop base rally, if it would have been hit your stop loss somewhere here, probably you would have achieved around 5,000 rupees or a little over 5,000 rupees profit you would have got. This is about Canara Bank. See, that's why you learn the concept, entry buffers, stop buffers in your lesson 18 or 19. And 1:3 RR is the minimum target to check the success of our software. Okay, now the second one, the one we discussed 2 months back. The video I kept in important analysis videos, the 2 months back, you can find that video. Whatever on that day we discussed, the same thing happened today. Everything is same. No exception at all. What is that? Everything is same. Okay, now prices are entering into this zone. So where you take the trade? Do you keep entry buffer again and take the trade? Exactly the way how you took? No, you cannot take. How do we decide that? We decide because a 5-minute zone is created with pro gap. Before prices are giving second entry, a 5 minutes pro gap zone is created. Drop, base, drop. If it is 1 minute, maybe you might have you would not have given much importance. See, 1 minute intraday, 1 minute also we give importance. But 5 minutes is very strict. 1 minute may not be strict if you have enough intraday time. Many times, if it is a pro gap with 1 minute zone, maybe it will give 1 or 2 times it will push. After that, the zone will be violated. Higher chances will be there during the intraday. But 5 minutes, it's not easy. 5 minutes also violate, but percentage is very less. Many times these pro gap areas will push the prices down. These points I explained a few months back. This drop base at the body, hidden body, this is a drop candle, follow through candle. Now you got the entry. But before you get the entry, do we have RR? You will check. Because quickly you have to analyze. Because candles are moving very fast, 5 minutes. But anyway, just 1 or 2 minutes are enough for you to complete this analysis after seeing this pro gap. Now your target is not 15 minute zone. Your target is the 5 minutes pro gap area. See, I have drawn the blue color line at the pro gap. That is your target. Okay, today it reached the zone and then came down. But many times price may not reach this 5 minute supply zone. The pro gap itself, it will go down and it will sharply come down. So that's the reason why wherever the pro gap starting area is there, that should be your target. The blue color line what I have drawn, that is the target. Okay. If you take a trade here, do we get the entry? No, because RR is not there. Let me start my explanation from that area. First we kept our 0.1% entry buffer. Let me start with that. So exactly this is the one. Suppose again you want to take an entry from this entry buffer. What is the RR you are getting? You are getting 0.97 RR. Okay, can I take entry from here? This is a type 1 proximal. The fine-tuned area is type 1. Are we getting RR? I am getting only 1.76% RR. Okay, to achieve the RR, can we go for type 2 entry? Type 2 is somewhere here. Let me check. See, this is the type 2. See, exactly the same level I dropped. See, this is the type 2. Type 2, what is RR you are getting? You are getting 1:2.45. What is the technique you have to do here? Adjust your entry in such a way you get the RR. These scenarios also explained that 2 months back analysis video, and this same technique I explained even Fridays, the 14th December video also explained. Now move this a little bit down until you get 1:3 RR. See, now you got 1:3 RR. So this is going to be your entry. What is your entry? 10592. You may ask a question. Suppose price touch this type 2 proximal entry and then it will move up. We will be missing this trade. Yes, you will be missing the trade. But you can't take because RR is not there. Anyway, you can't take the trade. Suppose if prices came more deep inside and if you get the entry, you are a lucky person, right? See, exactly that is what happened in this candle. 11:45 candle, prices just entered into this zone and we got the trade. And bearish day today, right? Today supply is very strong when we took the trade in this area. See, next candle also gave an entry. In case if anybody missed here, they would have got another trade opportunity. Third candle, the prices went more deep inside, very close to the distal line of the zone. But below the distal line, we have stop buffer. It didn't touch the distal line, a little before distal line. But see the next candle. Next candle, prices reached the distal line. Prices went below the distal line. Exactly the stop loss ending level it went. And then sharply prices moved up and then moving up and even prices consumers. See, all of a sudden demand increased and finally reached this even consumed the entire orders in the pro gap area and reached the supply. Of course, supply strong, even more strong order flow will be there. Now it pushed the prices and finally entire zone is violated. You may ask a question, can't we take a third trade here? No, you cannot take. What is the reason? Because this zone is already pierced. Prices almost reached your distal line. It already crossed the distal line and almost reached your stop loss point. Forget about stop loss. Once the zone is pierced means the price went below the distal line and then moved. Maybe it is even little below, even 5 paisa or even 1 paisa below the distal line, price move and move up. You can't take the trade. You cannot take the trade because this entire order flow has been gone. So that's why third trade you should avoid. You know that this zone will be violated now. Why? Because there are no more order flows, fine-tuned order flows. Some movement at the distal line, entire 75-minute zone. There was a 5-minute zone is here. Maybe some play. That is not good enough. These are all small. They won't push up to your target zones. Small movements. That is the reason why you are not taking trades in the 5-minute zones unless it is a fine-tuned 5-minute zone. See the difference between 5-minute zone and fine-tuned 5-minute zone. 5-minute zone means a normal 5-minute zone. It is not part of the 15-minute zone. And both together not part of the 75-minute zone. It is an independent zone. It is not inside any 15-minute zone. So such kind of 5-minute zones, small order flows will be there. But they may not push the prices until your target zone, unless that 5-minute zone is a aggressive trade setup zone. That aggressive trade setup zones based on price action clues, we can tell the zone might be having a strong institutional order flow. That way we will guess. If you don't guess properly, many times those zones will be violated easily. That's why I am telling all the people who are having less experience or beginners not to enter into the aggressive trade setup trades unless multiple price action clues are available. Multiple price action clues are there, 95% the zone will work, no doubt in that. One price action clue is there and you are not an experienced person, many times wrong trades you will select. That's why I am strongly recommending not to take aggressive trades until you get good experience or until you find multiple price action clues. Multiple price action clues definitely you can take because success rate at least 95% will be there. Rare situations they may violate. Okay, see, today it entered, maybe the zone is pierced but finally reached the 5 minutes target zone. When it reached at 12:30 it reached. When you took the trade, the first 11:45. After that 20 minutes it was in this area only, within this area only. Then the movement started. Because a lot of order flow is there. Supply is also strong. Still how it holded. Probably institutions spread their orders until this stop buffer area. That's why it pushed the prices up. By the time it consumed our entire supply. Now there is no more supply. Easily price reached up to our 5 minutes target zone having the pro gap. Why 5 minutes pro gap we are saying? Because this is a pro gaps are a very strong area, institutional order flow areas. Probably those who gone for a short trade here, see you would have got a very good profit in this pro gap area. But anyway, we can't do that because this is a high liquidity zone. Inside high liquidity zones, so playing is very dangerous. Today it worked. Maybe sometimes this zone will violate and it will reach this 15 minutes target. Who knows? Anything can happen. But anyway, the zone is violated and it gave profit. And how much? 3,510 rupees, which is a 2% ROI it has given. See, both together how much profit we got from the same zone? Around 10,000 plus profit we got here. Here both together we got 5.9%. That means close to 6% intraday ROI we got both together, because we are using same capital for taking the both the trades, because first trade is completed, then we are taking the second trade. That way you have to understand. So these are the two successful trades. And remaining, we didn't get any trades, but we will quickly discuss how we fine tune the zones. First one is DMART. This is a daily high liquidity demand zone, and this zone is created in August 23. We don't have 5 minutes data. I fine tuned up to 15 minutes time frame just to observe what is happening. So 15 minutes area it moved and then moving up. Anyway, 5 minutes data is not there. We didn't have any trade, so I'm not focusing on this stock. Laurus Labs. See, every day we are getting this Laurus Labs stock. Every day it is giving profits. Even today it gave profits. Even though we are not counting those profits, even today it gave profit. What is this zone? This is the 5 minutes HLQ zone. We identified earlier, we got an aggressive trade on this day. Every day it is giving profit. This candle, this, and in this candle it looks like it is violated but still created. Let's directly go to the 5 minute zone. This was the 5 minute zone we have identified as a high liquidity zone. Sorry, not 5 minutes. 5 minute zone, did I delete? Yeah, this is the 5 minute zone. This is the zone identified by our NeoStock software, the 5 minute zone. See how many profits. First one, second one, third one, fourth one, fifth one. This is the fifth. Here it is pierced. That day we took the trade. It is pierced, but it is within our stop buffer area, and it gave a profit on that day. Next again from the same area it came. Why? Because at the time we seen a 1 minute zone here. Go to the 1 minute time frame. The day when it is pierced first time, here it gave a 1 minute zone, rally base drop. This is the 1 minute zone. And from this 1 minute zone it gave multiple trade opportunities. This is the first trade. This is the second trade. Again a rally based drop is created, high liquidity zones. All these are all 1 minute level. Again third trade it gave. See the big push on this day. Again one more trade came down. Again one more trade came near till this 1 minute area, came down. Here I think this is yesterday. It came down. Now yesterday it is pierced this zone completely. Monday. This is Monday's price action. So let me delete this 1 minute zone. What I did yesterday, again, because I know institutions are playing here, they are doing a damn play here they are doing. So that's why I got doubt. Again today they will do similar kind of play. I have seen 1 minute zone here, rally base drop. I am very much sure, definitely from this area, they will pick up the orders, again push the market down. That is what happened today. See here today. Today morning 9:22 candle, it gave the trade and then again it pushed the market till this blue color line as a target. Many days we have taken till that level, they pushed the prices here. This is our entry and this is our target. And when it reached morning 9:22, when it reached here 1 o'clock 30 minutes. Every day, what is this? This is the 5 minutes high liquidity zone. They created an impression this zone is violated, but still institutions are playing in this area only. 1 minutes are now keeping the major role. That's why I didn't delete this 5-minute zone. I kept it for the reference, not for taking the trades. A little above the 1 minute or a little below the 1 minute or exactly within this, a little above this 5 minutes high liquidity zone or little below this 5 minutes high liquidity zone or exactly in the middle of this high liquidity zone, they are creating 1 minute zones as high liquidity zones. Until the order flow has consumed, they are playing. Once that is violated, they are again creating new order flows. That's why continuously last few days, this entire week, entire last week, institutions gave trades. Go to the 5 minutes, you get clarity. From when we are getting the trades? From 9th December onwards. Last week Monday, not last Monday, last week's Monday. Already 1 week completed. Still they are playing. And last 1 week, every day, all 5 days, last week, all 5 days, they gave the trades this zone, and yesterday it gave the trade from this zone, even today it gave the trade. That means continuously last 7 trading days we can grab profits from this stock, Laurus Labs. Okay, this concept comes under pierced zones concept. The pierced zone strategy concepts, they will come. I am yet to explain you that pierced zone strategies. But already I made a special video on pierced zones and I gave you some clues in that video. But the clear strategies you will be learning in the coming days. But why I am focusing every day, even though I am not capturing these profits in our Excel sheet, why I am discussing every day? Because I want you people to understand the importance of pierced zones. So at the time when I explain the pierced zone strategies, you people will easily learn those concepts. First you should understand the importance. Because pierced zone is a new concept I developed. And I integrated that concept in our software. That's why software every time it shows you pierced zones. Even though they are not eligible for taking the trade, but they will be useful to you. Later on you will be changing. You will be learning the strategies. How we can make use of the pierced zones and take the trades. This is one such kind of strategy. We are not taking trade in the pierced zone, but near the pierced zone. That is above, a little above or little below, or exactly in the middle of the pierced zone. A new order flows institutions are creating. From those order flows we are taking the trade. See, this 1 minute order flow, a little above the pierced zone, 5 minutes pierced zone. Today it gave an entry and reached the target. Earlier we drawn this blue color line because many times it is holding the prices during the intraday. Many times. That's why this is the right area to book the profit. It went below, but many times this is the area. Prices are reaching and holding, and after that it is either going down or again from here going up. That is a different story. But from here to here it's a very good profit. Just calculate how many, for all the last 7 working days, how much profit you would have gained if you are taking trade every time, every day, at least one trade every day. If you are taking last 7 days only by using Laurus Labs, how much profit you would have gained? If anybody is having interest, please do the calculation and put the value in the comment section so that I will know and other people also will understand. If anybody is having time, please help me by doing these calculations. We have a 1 minute zone. We deleted yesterday only. Yesterday the 1 minute zone was pierced. When that 1 minute zone was created on this day, that 1 minute zone gave the trades. So this is the trade it gave, this is the second trade, and this is the third trade, and yesterday this is violated, the 1 minute zone. Actually pierced, still it gave the trade. After that completely violated here. While violating, a new 1 minute zone is created again. That new 1 minute zone, today it gave the trade. That is the way you should understand the concept. So this is about, every day we are discussing, last 1 week, every day we are talking about Laurus Lab. Every day our software is giving Laurus Lab. Every day our software is recommending, continuously last 1 week. That's why every day last 1 week we are discussing about Laurus Lab. If our software did not recommend, we won't keep that stock in this list. Only previous days recommended stocks only we will keep in this list. Okay, Canara Bank we discussed, PFC we discussed. The next one is Arvindo Pharma. We did not get the trade. This is a 75 minutes high liquidity supply zone. How I fine-tuned? Let me explain. This is today. Price did not enter into this area. This 75 minute structure is not good, but it is having a 5 minutes order flow, rally base drop. Sorry, 15 minutes order flow. This is the rally base drop I have drawn. This is the 15 minute zone overlapped at the distal line. Lesson 22 concept. Lower time frame zone as an horizon to the higher time frame. Here higher time frame is our 75 minutes high liquidity zone. Here rally base drop is there, but I didn't draw this. Again, this is entire thing is violated by this candle. But this candle picked up the orders from this lower time frame zone as an horizon to this higher time frame zone. And this 15 minute zone again fine tuned with 5 minutes time frame. That 5 minutes is also an horizon to the daily high, the 75 minutes high liquidity zone. See here we have a drop candle. We have two base candles and again a drop candle. This is the 5 minutes fine-tuned area, which is the horizon to this entire 75 minutes high liquidity supply zone. So in this stock we need to plan our trades. Lesson 22 concept, but prices did not enter into the zone, so no trade. Next one is computer age management services, CAMS. This is also same concept. The 75 minute zone identified by our software, drop, 3 base candles and a drop. And this is the area we fine tune with 15 minutes time frame. But in the 15 minutes, here the structures are not good. The reason is this is a rally candle, this is a drop candle. In between there are no base candles. But how they are holding how they are able to, which order flow is holding the prices here? This is the one drop, 3 base candles and a drop candle. Drop, base, drop. This medium size candle is part of the base. Of course, I agree. The initiation has started from here. Yesterday I explained about imbalances. Strictly speaking, for fine tuning, I draw zone like this. That is what I explained yesterday. This is the way I draw the zone. See, still it is acting as. But generally, how you draw the zone? You draw zone like this. Yesterday I explained the same zone, how I draw. I draw like this. This is not the leg out, this is the leg out. But I consider both together is the leg out. Why? Imbalance started from here. The candle time is completed. That's why the continuation is followed in the next candle. That's why by combining both the candles, I am seeing the picture. Yesterday's HLQ zone analysis clearly explained. That's why I added yesterday's HLQ zone analysis video into important strategies and analysis video. But this is my risk management point of view. When prices enter in this area, I will go for a short. See, now the risk is reduced and I may get more profit. Many times prices will travel up to here, not here. Rarely price touch this area and come down. At the time maybe I may miss the trade. But I am just telling you how we are planning the trade for the risk management point of view. Because in the intraday, even if you reduce a small risk, you have a huge advantage. Your profit levels will increase. If analysis goes wrong, your risk also will reduce. Once you are gaining experience, you will learn all these techniques. Anyway, I am teaching all these techniques. Those whoever is listening, they are learning these concepts. Some of you are thinking that, okay, you already learned the concept, no need to listen. But those people are missing these concepts, unfortunately. Okay, the last one is Dalmia Bharat. This is also a 75 minutes high liquidity zone. A drop based drop. In this stock we didn't plan any trade. Why we didn't plan? Because this fine tuned 5 minute zone is slightly pierced in the recent time. I will show you. Okay, here let us go to the 15 minutes time frame. In the 15 minutes time frame, here we have a fine tuned zone. Here there is no proper fine tuned zone because prices reached near the distal line. Many of these order flows has been gone. So this is the valid order flow, 15 minutes level. We have a rally, we have two base candles, we have a drop candle. You may ask, can't we draw drop base drop? No, this drop base drop is already violated, so I'm ignoring in the recent price action. Okay, here we have a fine tuned 5 minute zone. See, we have a drop base drop, excellent zone, drop base drop. And this drop base drop already gave two trades. That zone gave two trades. Second time it is pierced. See here. This is the first time. See, first time price with entry buffer. It has given some trade and pushed the prices. Second time prices entered and gave the trade. Third time near the distal line, just a small, very small. This is almost 2000 rupees stock. 1900 some 74 rupees is there. So 20 paisa. If it is a 100 rupees stock, it could be like maybe 1 paisa, 2 paisa pierced. So 20 paisa pierced. 20 paisa is negligible, right? And after that sharply it came down. It gave a very big move. And because this zone is pierced, you can't plan any trade in this zone. This time this zone will be violated easily. Otherwise institutions push the price here. In this area again a new 5 minute zone they create and push the prices. Next time in the retracement again we get a trade opportunity. That possibility is there. That is what happening in Laurus Labs, right? Same thing might happen here also. We don't know. But unless they create a new 5 minute zone in this area, in this 15 minutes area, you cannot plan your trade. Because there are higher chances this zone will be violated. Entire zone. So that is the reason why Dalmia Bharat we didn't plan any trade. So these are the high liquidity zones identified from our yesterday's report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.